Hey, so we've entered some new volatility in the stock market. It started at the beginning of this year. We started having sell-offs in the market, partially because of rising interest rates and inflation. But now we have a new layer of concern, which is war with Russia invading Ukraine today. You know, it's not fun to experience a stock market correction. We're in the 10% sell-off territory. I would argue that it's somewhat healthy right now. I mean, the market's up 280 something percent over the last 10 years. Even in the last year, we're still positive. And then looking at other asset classes that are still positive, other than just the S&P 500 and Dow. But really, you know, in times like this, maybe sometimes anxiety or maybe for some panic sets in. We have to remember that we have to have a long-term focus. And I know that we preach this every day. We talk about this every day in our blogs and our podcasts and our videos. But this is when it really comes into play. It's easy to say I'm a long-term investor when everything's moving up. But right now, the market has three concerns in the short term. One, Russia invading Ukraine and what that means for the rest of the world. Right now, maybe it stops in Ukraine. Maybe Russia continues past Ukraine. We don't know. So that's uncertainty. The market hates uncertainty. Other two issues that are, I think, more real issues for the market is certainly going to be rising interest rates. Fed's expected to raise rates later this year, as well as inflation. Now, we have some good news. Inflation, if you remove oil and energy, so oil and natural gas are up significantly this year already, partially because of the Russian invasion of Ukraine and the rumors of that leading up to that. But if you remove that from the consumer price index, we're actually starting to see inflation taper where it is, meaning that it's not getting worse. I'm actually getting a little better in some sectors. So that's really good news. Brad also gave me this, the S&P 500 companies. So far this year, 84% have reported earnings from 2021. 77 have reported revenues and earnings above analyst expectations. So that means that 77% of the companies reported, which are about 84%, have posted revenue or earnings stronger than expected in the market. That's really good news. Also, we have COVID cases dropping. We have COVID restrictions being lifted. Unemployment continues to fall. As Warren Buffett says, be greedy when others are fearful. So I see this as a great opportunity to put new money to work in the market, to also reinvest dividends into lower price stock. Yes, I don't like seeing portfolios fall in value like anybody else, but we also have to have a level head about the situation. And right now, Russia, Ukraine have taken over the headlines. People aren't talking about inflation. People aren't really talking about rising interest rates. I think we're more focused on that. We've made adjustments in our portfolios to accommodate rising rates, to accommodate higher inflation, which is U.S. stocks. That's the best solution for that. And then shoring up some of our bonds using short-term treasury inflation protected securities, which Brad wrote about here recently when he made some changes in the portfolios. So stay encouraged. Pray for the people in Ukraine who are having to run for freedom. Certainly don't want to devalue any lives lost in this conflict already. But as investors and looking at our portfolios, we see some positive things out in the future that I think once we get past Russia, Ukraine, that markets will rebound. Historically, after war has begun, such conflicts such as this, 50% of the time after 1 month, the markets are higher. 75% of the time after a year, the markets are higher. So statistically, we're better off staying invested in our portfolios than we are going to cash and then trying to decide when to get back into the market. Because when the market rebounds, it's going to be only maybe 3 or 4 days that get a lot of the returns back. If you miss those days, you'll never get your money back. So that's when we focus long-term. We understand the short-term noise, but remember, every client here at our firm has a financial plan in place. We've planned for 20% drops in the market, and your portfolio is still strong enough to get you through age 95 in retirement. So stay strong. Call us if you have questions. Happy to help.